The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another excellent edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host, the koala bear of Wall Street, David White. It's another wonderful day here in the stock market. And what are we up at? 12 points on the S&P cash. Till probably about the last hour, we had just about no volume, starting off the show with 1.9 billion shares, so a little soft. Not uncommon going into a big, long weekend where a lot of people traders have probably already left. Some haven't been here all week. Of course, we were waiting for the beige book information to come out, and we'll talk about that in just a second. But to this point, a nice move up, but it's been on very, very light volume. First 30 minutes, about 300 million, about 320 million shares on the New York Stock Exchange consolidated tape, and extremely light volume between 11 and probably 12:30 as Janet Yellen gave her first first live speech since becoming the Fed president. And not a whole lot in there. There's a couple of sentences that get in to what she's doing. But I think it's more important here, other than what she said, to understand what her mission is. Right now, the mission is to get out of all the quantitative easing and the low interest rates as quickly as possible and do it without blowing up the stock market. Now that the Fed has $4 trillion on its balance sheet, fairly easy to do if they spook everybody. So the entire operation at the Fed is now geared around letting the air out of the balloon that they pumped up as slowly as possible so that there aren't any disruptions in the system. And they will come back and forth to let that air out of the bubble. Right now they're letting a little bit more air in over the last few days. And, of course, started letting a lot of air out of the bubble when they said that they would start raising interest rates in about 6 months. I think that statement is probably closer to true 6 to 9 months than what she's saying today. But they will back and fill. What they don't want is a lot of people exiting the market all at once. They want it nice and orderly. They need that frog boiling level of a marketplace so that they don't get the finger of fickle fate pointing at them. Of course, the Fed has gone through, about 20 boom-bust cycles. Each time they've added liquidity or help to the market, they waited far too long before cutting it off and had huge inflation problems following these movements. They are trying to change that this time and looking at moving the interest rates up. And I think that 6 months is what they are truly thinking. But, of course, they're going to have to give it in doses, just like they can't tell us about all those aliens in Hangar 51 in Dayton, Ohio, wherever it's at. I don't really believe that. But that's what everybody says. You can't let everybody know at once. You have to let them in on the deal. But what she did say today, which is probably the only thing that does matter, why the markets are probably not moving a great deal after these highs, in light of the improvement evident in the employment, production, and sales data for March, she is now willing to concede that a significant part of the earlier softness in the incoming data was weather-related. And she said that in the comments question and answer just a few minutes ago. And I think that's probably everything you need to know, that nothing has really changed for their long-term their views of it, and they're probably going to be raising interest rates starting the first of the year, if not right before the end of the year. That 6 months was probably truly what she believed. The market wasn't ready to listen to it, just like the aliens. And, of course, it is what it is. I guess I can't say a lot more. You can always give me a call at 877-927-6648, 877-927-6648. We'll be watching the volume and the movement by the end of the day. 1.9 billion shares is going to be light. Of course, a shortened week. And, of course, pretty much the last day. My guess is that we're going to see kind of a flat day to lower tomorrow as a few people get out before the long weekend. Continuing to see a lot of movement in the crane situation. If you hadn't been watching the news, they had just picked up some of the armored personnel carriers and ran off with them. That's the Russians. And everybody's kind of looking the other way and whistling past the graveyard on that. But I think there's more than a few people that I respect that are wondering if this isn't the beginning of World War III. This is the way these things start, and you put it into them early. You don't let them grow. And unfortunately, pretty much I believe that's what the world community and the United States is letting happen now, and that is letting something small grow into something large. Probably need to take care of it early instead of later. Other things going on out here as I'm watching with one eye, 1855 on the S&P cash, 1.97 billion shares. Today in history, in 1998, Cendant, one of the great growth stocks of the 1990s, collapses as the firm discloses potential accounting irregularities. Let's just state that what it is. It's fraud resulting from its binge buying of other companies. The stock loses 46% of its value in a single day, right after leading analysts at Morgan Stanley, Dean Witter, Goldman Sachs, BT, Alex Brown, and Furman Seltz have all just that day recommended it as a strong buy. Not looking too good. Almost all those companies, though, later on, people had gone through the emails, checked. They all knew what was going on. And they were all dying to get anybody to buy any stock from them that they could. And nothing's new other than email makes it a lot easier to catch these folks in their lies when they push these dogs of a stock out on the public. And, of course, some very minimal fines on this one, if I remember correctly. Nothing compared to the money that they saved by not writing this pig of a stock down into all of that. In 1835, it was a glorious day for insider trading. In Albany, New York, Senator Kimball earns $2,239 by opposing a bill permitting the Harlem Railroad to issue more shares after he sold the stock short. When the railroad lobbyists board the steamboat to return to New York with the bad news, Kimball buys back the stock at its newly depressed price. Then he reverses his opposition, allowing the bill to pass, and sells the good news of the bill's passage before they reach New York. A few months later, Kimball was expelled from the state Senate because of his insider trading, and probably the first recorded time that senators were playing the market. Now they do it a lot better, and you never hear about it. But the same thing still happens. There is nothing new under the sun, by Horatio. Bank of America, if you listened right after the earnings came out, you'd find out that they had wildly beat everything. But when the market opened, they were down 1.8%. Lower. There's a lot of range out here for the quality of financial reporting. And I think a lot of these folks, especially some of these newer folks coming in on some of these cable stations, don't know that the devil is in the details, and more than willing to push these stocks around based on the first line coming out. And don't know that after that, all the dirt kind of comes out last. But Bank of America, it's okay. But I think the weakness that we've seen in the financials continues. After the bell tonight, we've got American Express, and that'd be it. We're talking about the press, and I just wanted to bring this up because we talked about it at the beginning of yesterday's show, and that was yesterday the Titanic, 102 years ago, sank, and we were bringing it up. But according to CNN, it is breaking news that 102 years ago that the Titanic sunk. And I just see the degradation of our news systems on a day-by-day getting worse and worse. And somehow I have a feeling an event from 102 years ago is not breaking news. But as everybody fights for a share of market, it becomes harder and harder. I did notice that we've lost 2 investigative reporters, one from the Time magazine who went to some of the New York newspapers, said he resigned over the weekend. Brendan Ursikoff, is that his name? Anyway, pretty much I've been hounding the political figures for years, but can't get anybody to do anything at the newspapers or at any of these cable news systems anymore. They just don't want to know. Last month we had a similar event with a reporter from CBS. She's been rather vocal over the weekend. But more and more, nobody really wants to cover these politicians and a lot of the things that they're doing wrong. And no real investigative journalists left out here. The ones that are seem to be leaving for greener pastures and or just leaving. But nothing worse than breaking news of 102 years ago. Oh, we got a nice quote in here. Ecclesiastes 1:9. What has been will be again. What has been done will be done again. There is nothing new under the sun. And then I think that was redone again for some of the Greek philosophers, and also done again in the Horatio one. I think that's Shakespeare. But it'll be. Speaking of gas bags, as a segue, I probably there's probably not a gentleman I despise more than Michael Bloomberg. Since he became New York mayor, city of New York, he's gone around doing more to remove your freedoms than any other person. Last night he came out with something a little interview, and I'll give you the quote. I'm telling you, if there's a God, when I get to heaven, I'm not stopping to be interviewed. I'm headed straight to the straight end. I have earned my place in heaven. It's not even close, he told Bloomberg. Of course, we're going to break here, but I'll be back in a minute. But, oh boy, is there anybody, can God just hit him with a lightning bolt right now? Just, shouldn't he? We'll be back in a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the signal box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you are under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we're looking at the reaction from the Fed's Yellen's testimony, the beige book, and what do we got? The 10-year. 2.66%, 2.64. Not a whole lot. Can't say that there's a lot into this other than we can see a market that hasn't really moved much since this happened. So probably going to see what happens into the close. Just a little over 2 billion shares, so very light volume. I would suspect that a lot of people would want to get out of the way before the long weekend if they bought these lows in the last few days, but that's just my opinion. But not a lot of energy into many of these, and quite a few rumors making the rounds that I don't think are there. Anyway, you can certainly email me at path@tfnn.com. You can post a message in the den, or you can call me at 877-927-6648, and I would appreciate your call. Anyway, got after the bell, what do we have here? I actually have a nice little list. I can actually find my list. So, what do we have today? Didn't it Amex tonight after the bell? I think I spied with my little eye. Where's that in the morning? Okay. Well, anyway, SanDisk is tonight, isn't it? SNDK. SNDK. So let's take a look at some of these stocks that are getting ready to report over the next few days. I show SNDK after the bell tonight. This thing's already gotten a whomping. And IBM, Google, That's somebody else in the den. Okay. Anyway, we've got a nice bounce on SanDisk, very light volume, so not telling me a great deal of anything back in here. We got a nice spike intraday, but most of these memory companies like SanDisk and MU both look like they made a high and made highs with the market. I did put out a special report saying that I had thought that most of these memory companies had pretty much hit their highs based on the price reductions in NAND memory. And I think we're probably pretty close. I think I put that out somewhere around the 2450 mark on Micron. Got back in there one more time, but pretty much rolled over on that day. So when we're looking at these, bias is probably down a little. And we've talked about it on this show before. The reason for memory really spiking and price spiking wasn't because a lot of new computers were being sold. A lot of it was new smartphones. And part of it was got one company going out of business and then another one catching fire. That company came back on about the second week of February and starting to see a lot of builds and prices start to fall in that NAND memory business. But that's probably the best is in. I'm not predicting that you'd want to short this stock, but certainly I have a feeling that most of these probably have seen their highs. And let's see, what else do we have? Thursday, we've got AMD. So let's take a quick look at that one. With Intel doing a little bit better, you'd think that they'd have a little better reaction today. Not really getting it, not feeling a lot of love. I know a lot of people wanted to get into this. To me, this thing is probably going to be languishing in this lower highs, lower lows back in here. Can't really see that we've got a lot in this one either. Probably the one that interests me most is CMG, and we'll be looking at this one post-break, I guess. But it's come back to its gap level, so it's probably got some fairly decent support, this 526. So I can't think that you'd want to be short this going in, but we'll take a little longer look at some of these reporting over the next day and in the next week as we come back. Give me a call, 877-927-6648.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is back with another Tiger Dollar special, and as part of this promotion, not only can you receive up to a 25% bonus on whatever you spend, but you can also gain access to a 5-part live webinar series with Tom O'Brien taking place the week of April 28th. Each morning during the week at 8 a.m., Tom O'Brien will walk you through how he sets up the market live and digest the previous day's trading action while analyzing overnight markets abroad in order to anticipate what kind of trading day to expect. Each 60-minute live morning webinar will be archived by around 9:30 a.m. that very morning, so that if you can't attend live, it'll be available for your viewing pleasure on demand whenever you're ready. Tiger Dollars can be used for any TFNN newsletter or service, and they never expire. So now is a great time to lock in extra savings on all TFNN products. Don't miss out on Tom O'Brien's 5-part webinar series. Get your Tiger Dollars today with up to a 25% bonus on whatever you spend before this special is over by visiting TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
And, yes, Daryl from the previous hours putting in some stuff. I've actually got the calendar up here. We got Google after the bell tonight, so that should be some decent movement. I'm not expecting anything in the way of movement in Google, really. I think their earnings are fairly transparent. It would take something way out of left field probably to make a big move. I suspect I looked at that earlier, and I didn't think that was anything more than about a 20-point move in it up or down, but we'll take a look at that also here. Chipotle, probably the one that interested me in that the downside is fairly limited, probably into this gap at maybe 520, and up on light volume again today. But this one would be interesting if you are looking for some room to run to the upside. I don't think that this one is one you want to be in short here. You want it to be short up there at 622, but no real signal out there. If this thing could get back up and maybe it'll make a Gartley or something up here where we can actually get a play out of this. Let's take a good look at Google while we're out here taking a look, and go back here. There we go. And that's what I'm saying. Most of these stocks pretty much back down to the levels that we have at support. Google up a little bit today on lighter volume, lower than the open right now, but you're basically support levels down there at about 540. And on good news, decent short interest, maybe you could get 580 on the upside on a surprise. Still probably not one that I want to be looking at. CMG's tomorrow. And let's see, what else do we have out here? Anything else out here? Okay. Star, Platinum. I don't see a lot out here. I think tomorrow is probably what we're going to get movement in. And I suspect if we are going to get a surprise, it's going to be out of Goldman Sachs. This has been banging around these lows for a while, but this is one that has had higher volume to the downside. The April 11th low at 151.65 it was 6.4 million shares. So you would think that you're going to get back in and retest it. That's also much higher than the last previous lows, going back to the August 30 low of last year at 150.23 and the June 24th low at 147.11 of last year. Both at 4 million, 3.6 million, 6.4 million on that down day, with a little bit of bounce out here is not something you want to be looking at going into earnings, and certainly one of the ones that I suspect has at least some problems potentially on bad news. Mattel, this one certainly looks like an ABC down. You don't see a lot of impotence to be buying this stock probably before September for the Christmas buying season for toys. Actually, huge ABC. I brought this one up on the show, and I think we brought this up on the Art of the Charts webinar. I'll have to remember. But this one was a great one where it came back in and it's basically filled a lot of this heavy gap down day of the 31st of January. That had 20 million shares, got back into it on April 3rd with 3.7 million shares, pretty much headed its down leg. When we look at the expansions on this thing, there's a giant gap down at 28 bucks, or just over 28 bucks. And that goes back to the, gap up on, June 17th of 2012. That had 13 million shares. So that's going to act as your support level at about 31 bucks. But could you get back down to 28, 21 if the market continues to move down? I think you could. And maybe midsummer, this thing consolidates out here. Maybe we'll get ready for the next big run back up. And let's do this for a second. As we actually use the cough button there. I don't know if I need to cough or sneeze, but it seems like I have everything going on today. It must be allergies, and I'm starting to get a little headache. But give me a call, 877-927-6648, and we'll discuss a little more of these. Morgan Stanley also in the morning, so we're going to have a lot going on in this banking sector. I dislike what we have in the lows. We do have a higher volume low also in Morgan Stanley. We've been talking about these financials not looking very good, and certainly that is going to be one of them. This one has a higher volume low than the February 3rd low in Morgan Stanley that was at $28.78 with 17 million shares. Pierced it on higher volume, 21 million shares on April 11th, and it's bounced out of here. You also had more energy than the last leg up. On the last leg down, and none of these really looking very exciting in this marketplace today. But again, I have a feeling you're probably going to have some decent moves in the first 30 minutes, and that will be it on a lot of these stocks going into the long weekend. UNH also tomorrow. Now, this one may be one of the better bullish setups. It broke out pretty much on the 19th, 18th of last month. You had some nice price spreads, not enough volume that I would like to see, but still a decent move up. Now you're back pretty much to the support level, which is going to be around 77 bucks probably. So maybe you got 50 cents down out here. But if this one did well, you could possibly see just about the low 83s yet again for that last major high on March 21st. Some of these where a lot of the downside is probably built in, and a lot of the upside is not. So a few of them doing that. When we go into Monday, when we do come back, we're going to be looking at Cliffs Naturals. A lot of these companies, like I said, these things have been kind of basing out lower. I think we still need to see Cliffs Naturals come out and test the $14.96 low from July 5th of last year. and this thing does not look like there's a lot to hold it up, and or lighter volume for a lot of these. Let's go to just a shorter time frame on this one. You've got 1740 out here with 12 million shares from the March 10th low. That has broken the previous lows that have come in around the mid-8s for volume. So I think you've got everything set up here for Cliff Naturals, probably to disappoint and at least go back and test the 1496 low back out here. Now, this will be on Monday, of course. Crocs also on Monday, CROX. This thing is coming back and filling its gap up. So one of the few stocks out here that you probably have some support on unless the news is absolutely horrid. But this thing is back at a decent level to buy it. Took off with decent volume on the 30th of December with almost 17 million shares. It's come back in that gap from January 27th with 1.4 million shares. They hit a low also on April 15th yesterday on 1 million shares. So not a bad looking chart out here. In fact, if this thing sets up, is that after the bell on Monday? Let's take a look next week. What do we have? Crocs. Let me find it here. CROX. Time not supplied. So I think this is one reports after the bell. I'll have to check it out. But this may be one that it'll be very interesting for a after the bell play. If the news was good on this thing will probably get back up to the $16 range. And you've got some fairly decent support not too far down. So if this thing doesn't have bad news and instantly gap back down to about $13.25, you might have a nice play back up here into that $16 range. And my guess is that it would happen fairly quick after hours. So you might want to take a look at that one. Halliburton also on Monday, HAL. What do we have on that? One of the few actually back up at the highs. I know we had some phone calls about shorting energy over the last couple of days. And I said I thought we were about 3 days early if you were going to do it either Sunday night or Monday. What we do have, though, is a fairly decent sell signal finally on Halliburton. Like a lot of these stocks, fairly light. 3.7 million shares today going into 8.6 million shares from the April 4th high. So you have a little bit of a signal out here. But again, I don't think I'd be pulling the trigger on this one, certainly with earnings on Monday, but also probably want to get through this weekend to see just what's happening in the crude market. What do we have? We're off 6 cents on crude, and I just don't think we're probably going to see any difference in that probably through tomorrow's close until we open up Sunday night. So maybe that'll be it. Let's go back and take a quick look. Yeah, we're back up at the top of the range on the S&P at 1857, 2.15 billion shares. So not a lot of volume coming in here as we push back up. Looks like a decent short squeeze without much juice behind it. And we'll continue looking here. Okay, what else do we have? Netflix also on Monday in FLX. Probably be a poor bet to go in here and start pounding on this one short and to the short side right now. If there's a stock that would have a nice little pop out on this thing, I think you could get this one. Certainly likes to gap during earnings. My guess is that they're not going to start putting a lot of the bad news into these earnings just yet. So maybe you get a pop up to 380, 390 back in there into these candles that really saw the heavy volume down. And might get yet another shot at this one to the short side. I do think this thing's going back to 60 long term, maybe in a few years. But right now, probably set up for a nice little bounce out of this one, and you might get yet another shot. I don't think I'd instantly short it at 390, but I think maybe after 3 days, if it could hang around there, didn't see a lot of volume coming in, it could be a nice possible play. Wynn Resorts, WYNN. Of course, problematic, especially with the turn down in business in China. But what do you have out here? Heavy volume down yesterday. Going to be hard to get around. I don't see real good indication of where this one's going, but probably want to test yesterday's low at a minimum, but maybe not get a chance before earnings. But certainly you didn't like that spike into yesterday's low. It certainly looks like you could get it. MGM, similar to Win from the email. I think you could say it's similar, other than the fact I don't think MGM has that many properties in China. And is it Wynn Resorts? Yeah, it's the same one, Wynn Resorts. I just don't think MGM has that much exposure in China, if any. I'd have to go back and look to make sure, but I don't think so. Again, this is another one that has come off to basically $250 down to $194. So you're probably looking for some kind of bounce out of this thing on earnings, and might get yet another shot if you get this thing back up to 215, 220. I'd have to take a look at it and see how the volume came in, but you'd have to look. Cree on Tuesday, and if we don't get to all of them today, I'll try to finish up tomorrow on next week's earnings and see if we see anything out here. This one, actually, we were short in the newsletter. We already covered it. Covered that short. But this thing looking fairly, at least for the meantime, set up. It's got a test kind of due it on November 20th at 52.85. Didn't get down there, but tried on April 15th yesterday for the low. Had 2.2 million. Nice little bounce out of this thing. Highly short now, so you have to take a look at it. But I would love to see a little short squeeze on this thing back up to 62, 62.50 and get yet one more shot at this. I've been covering this fairly heavily in the Tech Insider, and I think that there's some reasons to think that long-term this has a lot farther down over time, maybe not instantly out here. ISRG. Oh. Yeah, we'll look at this when we come back. Again, you've got plenty of time to email me at path@tfnn.com, or you can email me at path.com, or you can call me at 877-927-6648.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
As we come back, finishing up the show here, just looking at Intuitive Surgical. Boy, this thing, if it can pull out and rip traders to shreds, this is certainly one that trades like the dot-com bubble stocks, up and down. Of course, this thing had about 3 days up in a gap and then came back down all the way. I was looking at shorting this thing, but I was hoping for a retest of this 541.23. Didn't get it. I went right back through the gap up and gap downs that have happened 3 or 4 times now between the 464.80 level. This thing's printing out at 418 or so now. But to me, you've got a pretty defined level down here at 357 from the July 19th, 2013 low, which is probably going to be support. And resistance, of course, comes in probably at about $520. So, you've got not a whole lot on the downside and a great deal more on the upside. So could you get $20, $30? The problem is that you normally need a $40 move either up or down just to break even on the puts and the calls. And so a hard one to play as you go into it. Had a second follow-up on EMGM, which is, do I see any real bounce in this one? And the answer is no. The volume's about the same as the previous low out here at $23. 13 million shares. We had 14 million shares yesterday as we went through that same $23 level. And you're going to get a little bit of a bounce out of here, but I wouldn't want to be long this stock. It certainly looks like it's just about ready to finish a second ABC down. And, of course, probably not going anywhere but sideways if you're lucky, and down and starting the next ABC down if you're not. So I'd probably stay away from all these gaming stocks, which ever since China's showed the resilience to come back and get rid of a lot of the bubbles in its economy, you don't want to really be long a lot of those stocks over in Asia right now, especially in the gaming stocks. I just don't think there's a lot there. Up at the highs now at 1858, 2.2 billion shares on the consolidated tape. Of course, it doesn't do you any good today if you're short this market, up 15 points. But, if we continue with something like this into the weekend, very, very bearish for next week to have a zero volume push up back into the highs for the B2C leg of probably a bigger ABC down in the markets. And, if you, 1890 to 1816. So what are you talking about there? About a 65-point move. That ABC would take us back down to, about 1790? And I'm looking for probably 1765. So this, maybe you got just a little bit more in this, but my guess is this is expiration day, and they've pretty much got everybody short earlier in the week, buying puts, and pretty much crushed them all. And my guess is we're probably going to go back to the mean next week and be looking for that ABC down into that 1765 level over the next 30, 45 days. And probably be a lot more ordered after we get at least half of these earnings out of the way. I did want to make one comment while we don't have enough time, so I'll probably pick it up tomorrow. But a lot of these earnings numbers that come out have been brought down significantly to outperform it. And sometimes you see these stocks and you go, hey, it beat or it met. Why is it getting clobbered? Well, everybody knows they've been bringing these down, and they've been bringing them down more and more each month. Anyway, sell when you can, not when you have to. We'll see you tomorrow, same bat channel, same bat time.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.